Hello, folks. Welcome to this week's market recap. Okay, it's not it's commentary. It's market recap this week because I am not going through this week's price action like the traditional way I do it. Start of the month I go through the monthly chart and subsequently I just go through the weekly, the daily, and if I have something going on, I share on the file time frame, right? But that hasn't been the case for a while now, and because um, you know, markets has been in consolidation on the high time frame, okay, and it's back and forth, and um, it takes a while for me to adjust to a market that is in consolidation, especially if we're just coming out of a trend, okay. It's it's a very typical habit of mine that I tend to stay in a particular market, condition, and just be a little bit rigid in terms of trying to convert to a new market condition. And most of the time, the consequence of that is that my activity around the chat gets very reduced. Okay, I'm usually not interested in doing anything on chats and stuff like that, and you know I've been feeling it's kind of like lazy, right? It's That's how I interpret it. It's like it's lazy, and I intend to correct. But on the flip side, whenever I try to correct, the markets are flipping conditions back to normal trends. For example, I was awake until maybe almost 12 midnight, my time, and I wanted to see how the markets opened because I'm sure everyone listened to the news or read some posts on Twitter about the stuff happening in Iran, and I wanted to see how the markets would respond to that, and that's one of the reasons why I like recording the commentary at market open on Sundays or Mondays because I get the opportunity of seeing what happens during the weekend, and for some reason I don't understand why all of this stuff will happen majorly during the weekends. I don't understand the logic behind it. Like, should you bomb a country during the weekend? Should bad things always happen during the weekend and then we get to see the after effect on the market? For example, the oil market. The oil markets currently, we're going to see more upside in oil markets, not because demand is more than supply. Demand is constant, okay, but supply has been reduced because I read an article on Nairametrics somewhere that you know Iran has sanctioned a close of Strait of something. A strait is where we see like highland on, I think, on two sides of a water pass or something like that. It's a shipping lane anyway, shipping route. Okay, that's how I put it. And that shipping route controls 20% of the world global oil supply. And when you close that in response to all of this, it's not like demand has changed, but 20% of world supply. That's insane. So prices from other supply or producers of oil will just go up to adjust for you know the demand for it. Okay. Anyways, so here is dollar index. We've kind of had very like funny price action. Okay, and currently this month the only thing significant the market has done this month was, aside from trade below the previous monthly low, is completely close this fair value gap here on the monthly time frame. And to reiterate, I'm bullish on dollar index, and I think that's been like a struggle for me, especially last week because I've been bullish on dollar index for quite some time now, especially after markets trading into the sell side. In fact, we're already looking at the possibility that DXY gets bullish around here, okay, because we had like change in narrative on the high time from institutional order flow, perspective, where we saw, commercials and stuff, already been bullish, priced in bullish, but at least we still allowed possibility for bearishness on DXY, around this price point because market structure and everything still aligned for the bearish DXY. But after that event and market straight into sell side here, and it's been okay. We want to see bullish DXY. I wanted to see bullish DXY, and I was just chilling, and we had like a daily time frame break of structure and market straight into a premium, which makes sense, and markets respecting resistance level, which still makes sense. But of course, we want to see very healthy candles, okay, not just cyclic candlesticks, candlesticks that showing unwillingness to want to trade and stuff like that. We want to see healthy candlesticks so that, the better the candlesticks, the easier it is for market structure to validate all of these things. But candlesticks it's been back and forth and all of that. And truth is, I think it's okay because I do not control the markets. The only thing I can do is, analyze data I'm seeing and, make trading decisions based off of them. And now we've seen DXY reject the same monthly fair value gap and below previous monthly low. And when I was teaching high time from institutional order flow, quantitative and qualitative analysis, I was always talking about the fact that when we know and understand that the high time from institutional order flow of a particular asset is bullish and markets are running below previous monthly low, weekly lows, and whatnot, it's salient to a turtle soup. Okay, what we're seeing is when market structure trades against the high time from institutional order flow, it's always a suspect because it has every potential to be a failed run below or failed run higher, and markets just reverses based off of that premise. Okay, so currently on the monthly time frame, what I would love to see, especially now that we have like a couple days until this month's trading closes. I think this is the last week of this month's trading. If this month's June closes bullish, that means we close inside the range of this old fair value gap here, and that's bullish for me in July. If June closes bullish inside the range of May's candle inside this fair value gap, that's bullish. And what's the draw on liquidity? The draw on liquidity first, I would want to see prices trade into the lower half of this fair value gap first. Although ultimately I'd want to see the markets trade into this premium fair value gap. Okay, but the lower portion first would be the area and price action of the eyeballing. So now that I've described what I would want to see based off of June's candle closure, it still doesn't mean anything because that's long-term perspective. And if you recall, for a while now, I've been talking about the yen market, saying they've been showing leadership in the yen, and that's exactly the type of price action we've seen here. Because I've been thinking, calling out dollar index bullish, and the yen has actually been trading bullish, and I've been looking at this high here as a draw on liquidity, okay, long-term draw on liquidity here, and I shared this post on Twitter, where I was showing here a run below this low is a turtle soup. We have a change in the state in delivery, a turtle soup, a reaccumulation to discount, and markets has actually been bullish. And as soon as I saw the market's gap open earlier today, I'm like, okay, if I'm going to engage, I want to see the markets rebalance the inefficiency first and look for continuation. I thought it's going to happen at, probably London session is going to take a while, and because we have lots of events coming out in London session, and we have news coming for dollar in New York, but I think there's so much volatility in the market, and it's not really just going to go the way I planned, and it's fine. Okay, truth is, I was with all the gap. There's no way I'd want to execute knowing that there's a lot of folders coming in. All right, I want everything to settle into price action and stuff like that. And plus, today's Monday. I don't really want to be so enthusiastic because I had a lot of revision during the weekend, a lot of journaling during the weekend, studying and stuff. Just to get me prepared for the new week. And I felt very, very motivated to, you know, come to trading, come to work this week. But I didn't want to do it outside the scope of my rules, right? Because I'm feeling very high and funky, okay? Because that's my own emotions. The markets don't care, all right? So I have to be very smart. Okay, it's not about how I feel. So I still have to be prepared. I still have to put on my rule set, okay? So the yen has been bullish, and I've been skipping setups on USD because of dollar index has not, validated its bias on the high time frame, and that's actually a very um, myopic way to see it. Okay, now I'm talking to myself if you're following. Okay, because I understand the high time frame institutional order is bullish. I understand the dollar index is in consolidation. Okay, markets are in consolidation. It means, however I approach the market shouldn't have to be on the premise of long-term price action. I can trade based off of key levels because there used to be a time I was trading downs when markets trade into an order block. I just go to the lower time frame to wait for market structure shift and trade. Now I have the information of trading key levels with the high time from institutional order flow. I think um, that's more than what I was doing back in the day. And I'm obviously not doing it because I want intermarkets to align and stuff like that. And that I think it's pretty lazy. So this week I'm gonna be doing, maybe before I delve into the later half of the mentorship, um, I'm gonna bridge series of lectures like daily buys. Okay, I'm going to bridge series of lectures in between because before we transition off of defining the high time from institutional order flow, and I begin talking about my day trading models, I think it only makes sense that we treat a lesson or two in daily buys, why I'm bullish, what constitutes the idea of being bullish or bearish. You understand? And we now look for models on the intraday time frame because once I produced the lecture during the Asian session, markets will trade in London. Of course, I'm going to participate and share chat on Twitter, and you know now we're now going to see the result of everything, and before I now go into discussing my model and stuff like that, so we can see all of the ingredients that contributes to um, a solid day trading result. Okay, it's not only about the model. Okay, there are other ingredients that should fall in, like the high time frame perspective. Okay, what's your daily bias, why your daily bias, and the intra uh, the drawn liquidity in within the dealing range, or if it's external range drawn liquidity, and stuff like that. So all of these ingredients should just come in, and that's what I'm thinking. Okay, so on dollar index, where we discussed the monthly time frame, we've said nothing really on the monthly time frame, and I'm thinking that the run below this low here is a Tory soup, and we are likely to see this candle close green bullish inside this fair value gap. All right. So this is weekly time frame DXY, and apparently we see the weekly time frame close bullish last week, but not really giving any information. Okay, and we understand markets run sell side, but there is nothing on the weekly time frame supporting the long term bias for dollar index to be bullish. The only thing on the weekly time frame would be if this week's price candle trades bullish and closes above this consecutive, down close candle, then that's bullish for July's trading. Okay, that's bullish for July's trading. But the daily time frame has something, we have something interesting on the daily time frame, which that's why I'm still, thinking of the market on only on solely on near term basis. I'm not going to predict what the market will do, however they want to trade. If the market trades through here and closes back inside and continues bearish, we're going to sell DXY. Okay, and I'm going to post a commentary or post my channel on Twitter or something, but we're going to sell dollar index. All right, so I don't care currently. I don't care. We would only approach the market from a near-term perspective, so that it allows and encourages more participation for those that can handle day trading, obviously, because that's why I always talk about learning to look at market from the high time frame, because it trains you. Okay, it trains you to be patient. Okay, you have a lot of patience when you're trading. So now when you want to day trade, you now look for very specific things on the daily time frame before you go into the lower time frame to engage and stuff like that. So that's the influence of being a long-term trader, or you understand, because it gives you the very major characteristic to be a success in trading, which is just having patience after you've learned concepts and you have a trading model and all of this stuff. So there's nothing on the weekly time frame because we have this consecutive 1, 2, 3, 4 candles. That's your auto block, and we have this candle trade inside this auto block, and this is your propulsion block. And this was the propulsion block I was talking about last week, saying if the markets are in consolidation, we're likely to see the markets trade into the propulsion block. That's what I was saying last week. And if we want to see the market expand quickly, we're going to see the market come off of this previous weekly low. Oh, I'm having hiccups. So we saw the markets return back here, the order block, the propulsion block, and there's no significance to how it will influence this week's price action directly, except for the fact that we're closer to this clean levels here. Because when we look at daily time frame, on daily time frame I shared my chart about what I was thinking the DXY was going to do, but I personally did not trust it. Okay, well, I personally did not trust it because the markets were just back and forth and all of that. So this is the dollar index on daily time frame. Okay, we have this clean level here. There's a fair value gap here. I was thinking that if DXY wants to be very funny, we could see DXY trading into this fair value gap, and this I'm still going to leave this fair value gap open because the price action here around here is not convincing enough. I know I wanted to see DXY key off of this old volume balance, but after markets closed like this, I mean, all of this price action, look at these candlesticks. These candlesticks are not healthy at all. Like these candlesticks, they are not it. So there's I don't know. Okay, so I'm bullish on dollar index, but I don't know how dollar index are gonna trade. And there's nothing on the charts that validates dollar index except if we have that closure on the weekly and the monthly time frame. At least the only thing here is that markets are likely to engage buy side liquidity here. But I don't know what's going to happen when markets engages buy side liquidity here. But I know what the markets are going to do in oil, in USDJPY. Just because those markets they've reinstalled full confidence that they are going to be one-sided for a while. So while we're thinking, okay, bullish on DXY, what's going to validate bearish on dollar index? Well, if we trade into this fair value gap and possibly close below this fair value gap. It means we'll be closing below this volume imbalance and closing below this fair value gap. Okay, so it becomes inversion levels, and then we'll be looking for downside on DXY. But for now, there's nothing. So we need DXY below key support level. You can see it's offering support here, support here. You can see resistance here, support here, support here. Okay, so when dollar index is below key support level, we can look for more downside. But there's none of that, and there's some clean highs here, like some draw on liquidity here, and you can see the markets engage. That when the markets engages this level, we're going to watch and we're going to see and determine what dollar index is likely to do next. So on the weekly time frame on Euro USD, we have USD trade above a previous high, a previous monthly high, and the premise of a bearish institutional order flow on the high time frames, of course. And last week closed bearish. We talked about potential USD trading into the previous weekly high, and that will be the closure of the daily time frame fair value gap. You know, when we see. And really, last week was still another consolidation because markets stayed inside the range of the previous weekly candle. So there's really nothing going in for Euro USD yet, except of course if USD likes to trade into or trades into the previous weekly low and begins to reject, but we don't know that. So Euro USD is likely to draw into the previous weekly low, but I do not know what happens when Euro USD draws into the previous weekly low. I don't know if it's going to reverse because we've already taken buy side here. I don't know if markets are going to drop into more discount. I don't know. Okay, so there's nothing on the markets that we can use to determine long-term price action, and we can say euros is going to go higher here. Okay, I really don't know because we've taken buy side here, and not just taking buy side there. Markets just run buy side here. Okay, this high here and this high here, so it's obvious, you know, markets are in consolidation. Because we can look at other markets and we can see other markets not reflect the same price action as in it is in Euro USD and, you know, the majors. Because look at USD CHF, still yet to take out sell side, like dollar index around sell side. So USD CHF still maintain sell side here. So it's kind of like a huge suspect. So I want to see how Euro USD trades this week. Although we had a very, you know, if you want to be bearish on Euro USD, this week's opening was something. Okay, we saw the market just gap. All right, that's a huge gap. First off, we want to see the market rebalance inefficiencies first, and then continue possibly in direction higher from institutional order flow. So this was the gap today. So I'm still waiting to see what happens in Euro USD. Okay, I'm still waiting to see what happens. If Euro USD is bullish, instead of markets, you know, rebalancing the inefficiency to make any continuation, Euro USD is going to close above these consecutive downward candles. So when Euro USD does that, okay, I'm flipping the switch. Okay, I'm thinking, okay, probably, you know, markets are bullish on Euro USD because there's nothing on the higher time frame that you can use to pinpoint on the weekly time frame that Euro USD is going to be bullish this week or Euro USD is going to be bearish. It's all speculation. It's all speculation. And that's why I cannot see the markets from the long-term perspective because there's nothing on the higher time frame that's going to give me anything to determine if the markets are going to go up or the markets are going to go down. So the only thing I'm concerned about is how does each day trades. And that's why I'm still not going to trade today. At least I'm not going to trade currencies today. Because I have nothing to determine what today's bias is. I just have the market, trade into levels I previously called, and market stayed on those levels, and and this week we're still around the same levels. I don't know. So until the market establishes the long-term buys, we can only look at the market from a scalping perspective, and that's what I mean by scalpers market. Okay, just short-term plays, short-term plays, short-term plays. I don't mean short-term like as in short-term trading, like intraday plays. Sorry, intraday plays, intraday plays, intraday plays, not short-term plays, just intraday plays. All right, and that's what the market is. So as we go through this week's price action together, um, obviously I'm going to be doing lots of comments online talking about markets. I mean, actually discussing price action, not only talking about how terrible the markets are. I'll be talking about my analysis, talking about how I'm looking at markets day to day, and I do probably a couple of videos this week for the mentorship. Now this is last week for June's trading, so there isn't so much you want to expect from the last week of the month. There isn't so much. Now so much can happen because there's a lot going on in the world right now. So a lot of things would not, as you would expect, would not be as you would expect. You understand? But on a very base level, you keep your expectations low. You keep your expectations low. Really, there's nothing really more than that. Okay, and until I see you in the next one, be safe.